Wingstop really is seeing phenomenal growth in this challenging market. You had same-store sales up 28.7% this quarter. Tell us what the strategy for Wingstop is in a sea of value offerings right now to keep customers coming back in.
Kate, you said it. We set a record quarter in Q2 that we reported yesterday. Same-store sales up almost 29%, and that being driven primarily by transaction growth. We believe we're operating in a category of one. We have a ton of opportunity in front of us. Just over the last couple of years, we've grown our average unit volume by $500,000 to achieve a previously set target of $2 million, which has allowed us to look at what's in front of us and the growth ahead of us. And we set a new target for our average unit volume of $3 million just because of the amount of runway we believe we have and the strategies we're executing against.
And talk to us about income cohorts. How are they faring at Wingstop? Are you seeing any trade down or pullback, particularly from low-income consumers in terms of their visit occasions per quarter?
Yeah, as you might expect, with the 28% comp, we actually saw a very different result than the rest of the industry. We saw growth across all income cohorts, particularly that lower income cohort. But the fastest growing income cohort within our business is that $50,000 to $100,000 a year guests. And we see those guests are coming into the brand as we continue to bring in a record pace of new guests. But what we really like and what we're excited about with these new guests are they're coming back to our brand sooner and they're moving up the frequency curve faster. So for the first time in my 10 years at Wingstop, we're actually starting to see an uptick in our frequency, and that's happening against what you described as a pretty challenging macro backdrop.
Michael, if I might just jump in here, Kate, indulge me. Two things. I want to be clear that I'm understanding something. You say unit volume of north of 2 million. Does that mean 2 million annual sales? Is that what that is?
That's right, Tyler. 2 million of annual sales, and we have a new target that we've set our sights on of increasing that to 3 million. Per restaurant.
And question number two is a quickie. I saw in one of the chyrons that I'm sure Kate submitted that more than 60% of your sales are described as digital. What does that mean? Does that mean that most of your customers are using their phones, placing an order remotely, and then coming in and picking it up, or what?
That's right. That's order ahead. Almost 70% of our sales are coming through digitally. And Tyler, what that's done for us is it's allowed us to amass a database of over 45 million users strong, and we've invested in that data to enrich it. That's allowing us to lean into something we're really excited about, and that's our recent launch of our own tech platform, My Wingstop, that's going to enable us to lean into hyper-personalization, and we think it's going to continue to drive top-line sales and impact frequency over time.
And Michael, it's Kate again. I'm curious, we just talked about the consumer. Obviously, they are flocking to Wingstop. But when you talk to your franchisees, what is their top concern right now in this environment? Is this sustainable?
Their top concern right now, Kate, is actually they want more growth. They want to open more Wingstops. And so we were excited to be able to update our total unit opportunity in the U.S. It was previously 4,000. We now think we can open over 6,000 Wingstops in the U.S. That's 3 times our footprint we have today. And so our franchisees, they're really just focused on they want more growth and they want to grow with Wingstop. And so we're pretty excited about that.
And you just mentioned, obviously, that updated store target footprint. That's more than triple what you currently have with Wingstop. How do you plan to drive that kind of growth at scale and make sure it's profitable for owners? Is there any concern about potentially cannibalizing business if there are too many Wingstops, for example, in one location?
Yeah, we think we have a ton of white space in front of us, a lot of runway. The original Wingstop that opened just 30 years ago, to give you an example, is doing about $4 million in sales, and it is growing transactions 30 years later, so continuing to grow. So we haven't found a point of maturity. Dallas-Fort Worth is our most mature market. When we went public about 10 years ago, we had 81 restaurants in Dallas. Fast forward to today, it's closer to 160, and we see a lot of opportunity to open more restaurants. And the important thing about us continuing to grow total sales per restaurant is our brand partners are making a lot of money. They can open a Wingstop on average for $500,000, and they're getting a payback on that return in less than 2 years.
And finally, we talk a lot about value. Tell our viewers how you are assessing pricing and if the price is right for the products that you have right now. Will there be a value offer, for example, a $5 grab bag like you're seeing at some of these fast food competitors in the future at Wingstop? Is it necessary?
Yeah, I think it's another one of the elements of our story that makes us unique is we don't have to get into those value wars. We've been very disciplined around pricing over the past couple of years, and that's paying dividends today. We're actually measuring record levels in value and quality scores with guests. And I think you're seeing guests flock to Wingstop and continue to drive sales, which we're pretty excited about.